In this presentation, we will continue on with our example problem to part 4 for the public university, this time putting together a statement of net position. The statement of net position will be similar to a balance sheet reporting how the organization, how the public university is doing as of a point in time, typically reporting the accounting equation, assets, liabilities, and the net position in the case of the public university. We're going to have the information on the left-hand side. That will be the information related to the trial balance, the post-closing trial balance, which we will then use to create the statement of net position on the right side. And the trial balance will be the adjusted trial balance. Note that it will be in format of debit and credit. As we create the statement of net position, we will be converting from debit and credit to plus and minus format. The trial balance has the assets in green, the liabilities in orange, the net position, which would be similar to the equity account in a for-profit organization, in light blue. Then in dark blue, we have what would be similar to the income statement type accounts, those temporary type of accounts. Here, focusing in on top to bottom, assets and then liabilities, and then we'll be considering the net position, often the most confusing component of the creation of the statement of net position. So we're going to start off, we're going to be going from top to bottom here. We're going to say that the cash is, well, we'll have assets first, is going to be our first component of the statement of net position, as would be similar to the case of a balance sheet. Starting with the cash. So we're going to be pulling over the cash of the $1,677,000. We're going to have the accounts receivable net. So the accounts receivable are on the books at the $235,000 minus the $19,000, giving the $216,000. So we're recording of these net. Next, we have the grants receivable of the $27,000. Then we have the interest receivable of the $900. Next, we're going to have the investments of the $280,000. Next, we have the capital assets, and we're putting the capital assets on there at the $2,404,000 less the accumulated depreciation. Notice it's going to be a contra asset account having a credit balance. We have it kind of like, it looks like a credit here, but it's not. This means a subtraction, meaning that it's going to be decreasing the capital account. So that's going to be the minus $357,000. If we add these up, then let's just do it just to make sure that we pick up that contra asset account. So we'll add these up. 1677000 plus 1216000 plus 27000 plus 900 plus 28000 plus 2404000 minus, you want to make sure you got the minus there, 357000. That's the $4,247,900. Then we're going to go on, of course, to the liabilities. Within the liabilities, those are going to be in the orange. They have credits on the trial balance. When we pull them over, we will not have credits. We're going to remove the credits. So the $57,000 accounts payable. We have the unearned revenue. Then we have the bonds payable. Bonds payable, if we sum them up in the outer column, we're going to get the $942,000. So 942. Next, the most confusing component, usually typically the net position component, similar to what would be the equity section in a for-profit type of organization. We have these amounts here, but note that all of this is going to be part of the equity section. We have that problem, and we have this problem that we're going to be breaking them out to the restricted and the unrestricted components. So how do we approach this problem? I would think about first considering this as it's going to be the equity as a whole. In other words, first get to the net position number here, see if we can get in balance, and then go back and consider the problem of the breakout between the net investment for the capital assets, the restricted and the unrestricted. So the way to do that is you just sum up all of the blue accounts. Now, if it was in Excel and you had the credits negative and the debits positive, really easy to do. You just sum them up. But if you don't have that, I still think it's worth it to go through that. You're going to have to do it in some way anyways. So let's do it now. It's going to be a bit tedious, but I just want to make sure that we see the debits and the credits as we add this up and see if we get to this $3,305,900. So I'm going to go all the blue accounts, the credits minus the debits. So I'm going to say this is going to be the 826,000 plus the 204,000 plus the 589,000 plus the 1379000 minus the 245,000 plus 3065000 plus the 855,000 plus the 9900 plus the 000 minus the debits of the 3245000 minus the 27000 minus the 51000 minus the 65000 minus the 3000. And that should give us the 3,305,900, which we have here. And then if we were to take the liabilities and the net position, so if I add that to the liabilities, 942,000, that should add up to the assets. That should put us in balance. So if we do that and it works out, then we can say, okay, everything we've done thus far should pretty much be good. The double entry accounting system says we're pretty good on that. Then we have the smaller problem of breaking out between these three categories, breaking this number out to these three categories. Now, the way we did that is we did the adjusting entries. So when we did the adjusting entries, we then posted everything to the unrestricted area and then went through and posted them out or broke them out to the net investment in capital assets and the restricted items. So if we go to the post-closing trial balance, you'll see the post-closing trial balance has only the assets, liabilities, and then we've broken out and closed out all of the dark blue accounts to the what would be similar to the equity section here to the net position section. And now we've broken these out, so we have the categorization. So we got the 1,303,000 to the net investment capital assets, the restricted items at the 305,300, which is here, and then the unrestricted at the 1,693,600, which is here.